Hi, everybody. This is Josh Jelinski, the financial quarterback, and we have special guest Caleb Silver, editor-in-chief of Investopedia.com. Caleb is frequently featured as a markets, economic, and consumer trends expert on MSNBC, NBC, ABC Radio, Cheddar, and numerous other daily newsletters. So we're talking about crypto with you and the cryptocurrency boom. You mentioned that you came of age sort of in the dot-com bubble, which then became the dot bombs. Do you find any parallels between the late, I think if we are to, everybody's worried about having another 2008, right? Like you talk to people have been worried about having another 2008, well, since 2008. We're going to have, remember the double dip recession of 2010 everybody was worried about? Then it seems like every so many years we're worried about another 2008. But as I've studied the markets, I think this period in history has more in parallel to the late 90s than it did 08. What say you about that? I'm worried about that.
Yeah, I mean, 2008 was a liquidity crisis. People overextended in mortgages, banks too eager to loan to people that didn't have good enough credit, and the whole entire financial system propped up on these risky bets. Very different from when you have a mania of investors or a rush of investors rushing into asset classes. And you're right, 98, 99, dot-com bubble, pets.com, the flagship, of that era. But when we have a lot of investors and new investors rushing into asset classes and bidding them higher without a kind of a fundamental understanding or actual care about how a lot of them work, you're going to get manias and bubbles like this. And I believe in the future of cryptocurrency. I'm not saying it's not going to be here. I believe in 10 years, we're going to be talking about Bitcoin. We're going to be talking about cryptocurrencies and operating through digital wallets and on the blockchain. So I'm a believer. That said, the rise in the asset prices of the tokens and a lot of the other derivatives of those, that's pretty intense. And that does remind me a lot of 1999 as well. And you have so many new people who are doing it, but also the technology, Josh, is so much easier to access the markets for anybody with a smartphone. Get a Robinhood or another type of trading account. There's zero commissions on trades. You can buy fractional trades right now. You can do all kinds of obscure types of trading just from your smartphone without a lot of knowledge on it. It's opened up and it's changed. The game has changed substantially.
So on the whole crypto thing, are you a Bitcoin maximalist or do you see the others as having some opportunity as well?
I see opportunities for various types of tokens and various types of cryptocurrencies riding on the blockchain or something like it. I believe that we'll be talking about Bitcoin for years to come because institutions have now adopted it. When Fidelity and the Schwabs of the world and JP Morgan Chase and Goldman Sachs are starting to make it available to their clients or at least talking about it, it's mainstream. When Visa and MasterCard are giving you rewards in crypto and Bitcoin, it's mainstream. When you can buy a Bitcoin-related ETF, mainstream, and we know a lot of those are coming. So I believe Bitcoin is here to stay. Will it be the king coin a decade from now? It's really hard to say, but it's got a lot of the market cap and a lot of the attention right now. But if you look at some of the other ones, there's some real practical uses for some stable coins. There's practical uses for Ether. When you look at what the financial services might look like in 5 to 10 years and what it's going to be running on. So you can see, if you've been studying the markets and the way money works for as long as I have, you can see how this could work. But it's hard to say which coin will end up on top. There's not going to be one ring to rule them all like there is in Lord of the Rings. I think there'll be a few coins. And then the U.S., the Federal Reserve or the Treasury Department here, they're going to probably issue some sort of a digital coin in the near future or in the next few years.
Fantastic. Folks, we'll be back after these messages with Caleb Silver of Investopedia.com. And during the break, give us a call at 888-988-JOSH, 888-988-5674 for the free 45-minute no obligation review. 888-988-JOSH. We'll be back after these messages. And we're back with Caleb Silver of Investopedia.com. So we're talking cryptocurrencies, and there's obviously a lot of cryptocurrencies out there and so many scams. Can you talk about the ones you trust versus the ones we should avoid?
Yeah, I only trust the ones that have worked so far for me. So like a lot of people, I have an account on one of these, public exchanges where you can get your own cryptocurrency wallet. I have that verified. So I've been playing it pretty safe there. But there are a lot of new coins out there that don't have a lot of backing, that have a lot of hype behind them. That's the fastest way. It's not necessarily to get scammed, but it's a fast way to lose money if you don't understand what's going on, because there's very few people, and this applies to Bitcoin as well, that really own the majority of those coins. They're called whales. And if you look up and down the token universe, you're going to find that whales control most of the market share of all those coins. So they move in any direction and they take the market with them. It's very different from, let's say, the New York Stock Exchange, where you have a lot of market participants, right? These are tightly controlled, even though they're widely available. So you got to watch out for that. And you got to watch out for offers for cold storage or free storage. You got to really understand how to store your cryptocurrency, how that works, and make sure you're double verified, password protected, but you don't lose that password. You don't lose those keys, because we've heard so many stories about people forgetting their password, forgetting their keys, and not being able to access their cryptocurrency. That's a real thing. But you also have exchanges popping up all over the world that may not have the type of regulation, and not that we have much regulation here, but there are some rules you got to play by where you could easily lose all your money very quickly. So you got to research very, very thoroughly what you're about to do if you're going to get into cryptocurrency. That said, you can go on to Coinbase right now, start an account. That money will be in there. You're going to fund it with something from your checking account. It'll be there tomorrow. I feel like that'll be around for a while, but I wouldn't risk, and by any means, more than 5% of your portfolio in cryptocurrencies, even if it was totally safe.
So as it relates to the wallets and everything, what about losing your cryptocurrencies? How does one protect themselves from I spoke to a guy today. He lost 2 Bitcoin when he started. So he lost the equivalent of 120 grand today. How do you protect yourself from losing your Bitcoin or losing your ETH?
Yeah. Well, the thing about the blockchain is that the entire premise of it is to have a decentralized place where you can have a digital signature of authenticity that makes things uniquely yours. And then when you buy a cryptocurrency and you open a wallet, whether it's on an exchange or in a company like a Coinbase, or if you're buying it through a separate wallet, there is a very particular digital identification number that is yours and yours alone, non-duplicative. And only you can access that. So you can't lose that. You got to make sure that's in the right place, just like you can't lose your vehicle registration. Make sure you know where that is, and make sure you're keeping track of it, even if you're not buying continually or trading cryptocurrencies. And we don't recommend people trade too heavily, but even if you're not that active in terms of the buying and selling of other tokens, check in like you would check in on your bank account. Make sure your password's working. Make sure the money you think is in there is still in there. Make sure you've been realizing the gains or the losses that are happening in your account. So I would treat it very much like a bank account. How often do you check your app on your phone to see what your balance is, or call your bank to see what you got in there, or if a check went through? I would treat your cryptocurrency wallet very similar to that, because you can lose that digital signature, you can lose your identification, and there's really nobody out there to help you. There's no FDIC coming to the rescue in crypto land.
Yeah, so I do think that'll be a way for people to innovate in the future, like people who could help recover lost Bitcoin. But, I guess that'll be an innovation that maybe will come. I could see
That's Blade Runner 2050 right there, my friend.
What's up?
That's like Blade Runner 2050. People coming to rescue your Bitcoin or your cryptocurrencies. They're going to be like detectives.
Yeah. And they'll be experts in chain analysis. It's a whole other world for people. They don't even, people don't understand really where this is all going. So what are your top 5 most trusted cryptocurrencies?
Hard to say, but I buy the ones that are most widely traded. So if you look at my portfolio, you're going to find some Bitcoin, some Ether, some Litecoin. I've explored some other coins, not to the degree that I understand those. I like to buy what I know. In terms of trustworthiness, that's a tricky one. We just surveyed our readers at Investopedia, because we have so many who are interested in cryptocurrencies, about what they thought was the riskiest of the coins. And you wouldn't be surprised to find the Shiba Inu coin up there at the top of the list. That's only gone up, tens of thousands of percent in just a very short time. There's nothing behind that coin. It's kind of a joke, but that's what's happening in crypto land. They also thought that Dogecoin was pretty risky, and we've seen that Dogecoin can be pretty volatile. Again, nothing backing Dogecoin. There's no asset underlying it. There's no asset underlying Bitcoin. All there is mass adoption. But a lot of these coins that are sort of memey in respect, and that they're talked about widely on the online forums and in financial Twitter, that come out of nowhere. You got to be circumspect of those, and only because, again, they're controlled by a very small group of people who can manipulate the price any which way they want, and there is no transparency for investors to find out what's happening, who's moving that money. You just know that the price went up or down, and there's not a lot you can do about it. Again, no fundamentals there. So all cryptocurrencies have risk to a certain degree, but if you're looking to buy one that most people own and maybe join the wisdom of the crowds, well, you're going to find the biggest ones out there are Bitcoin, Ethereum, Litecoin, Tether's out there as well. I know that has issues. Cardano's out there, Solana. There's so many coins. You can just look them up on Investopedia, the top 10 cryptocurrencies, and we have a pretty up-to-date running list of them.
The preceding program was sponsored by the Jelinsky Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jelinsky or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jelinsky.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to affect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jelinsky and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation.
Advisory services offered through Wealth Quarterback LLC.